have a question. I have a home mortgage that I recently took over, and I also have a huge school debt that prior when I was in school or acquired the debt, it was not a priority in my younger years to, of course, pay that debt off. Now I'm older, it is a priority to me to, just let that debt go. Prior, I was just more so on, as long as they give me a forbearance or a deferment, then I'm good. I don't even care about the interest on it. But what I have learned doing that has really hurt me because even though I didn't have a monthly payment at that time or no interest, I didn't have a monthly payment, it was still accruing interest. And so something that was not big at the moment has became big. So I don't have any debt as far as student loans and my mortgage. I have an 800 credit score. So that's the only thing right now that I have that I need to get off. And my debt right now is roughly like 90,000. I'm gonna say between 88, 90,000. And I think I'm at a 4.0 interest rate. I am in a deferment right now. So I'm looking now to just be debt free on my student loans. That's my focus. And I just enter into my second home mortgage, my second home that I have, where I have a mortgage on this one as well. And this is a new construction home mortgage. So this one is fairly new. So that is not as a priority to me because I am interested. I would like to learn about it, but this is not going to be the final home. I am going to rent this house out. So we can discuss that if I need to. But my main focus really is to take care of those student loans.
Gotcha. All right. So let me go over here. All right. So let me go ahead and pull up an amortization schedule. So you say you've got about $90,000 worth of debt right now in total?
Yes. I'm talking about just student loans.
Okay.
Student loans.
But you have a mortgage as well.
Yes, I have a mortgage. Are you asking me what's my total with my mortgage and my student loan?
Right.
My mortgage and my student loan, I say 350.
Okay. About 350?
Yeah.
All right. And when all of your bills are paid, do you have an idea of what your discretionary income or what is left over after all the bills are paid?
I say roughly about 1,200.
Okay. All right. So yeah, that sounds about right. You can definitely take advantage of that. So what we need to do is figure out how much interest you're paying on those loans and figure out how interest is actually charged. So you said about 300,000?
No, as far as the total, it's 350.
350.
Total.
Okay. 350,000. And so your interest rate is about what? I'm going to average it out.
My interest rate for my house or my
both. Both.
Okay, so my interest rate for my house is 2.8. My interest rate for my student loans, I'm guesstimating because I'm not for sure. I'm just estimating maybe about 4.0.
Okay.
I don't think it was no more than that for sure, though.
All right. So I'm going to average it out to 3.125. Okay. All right. So now we got 350,000 and your loan is a 30-year loan.
Yes, it is.
Okay. So here's what we're looking at. And that's what most people are unaware of. All right. So the principal and interest I'm looking at on the payment is about $1,500. It's $1,499.31. That's just the principal and interest on the mortgage plus the payment for the student loan. So I'm just kind of combining it. We would separate it out, but because I don't have all of the details, I just wanted to give you an idea of what your $1,200 could do by putting it in a savings account. Do you follow? Okay. So once we take a look at how all of this works, we would then take a look at what you're paying each month on your bills, and whatever's left over, the program, our artificially intelligent cloud-based computing platform, will then direct you to put a certain amount of that money in savings every month.
Now, let me ask you something.
Sure.
So this is going to be your program. Is it geared towards where like not all the extra layover money goes into that account, or is there a certain amount based on that goes into that account?
Well, here's what we're talking about. What we're going to be looking at. Let me tell you what we do with that leftover money. Okay.
Okay.
So first of all, the first thing that we put into the budget is how much does Gabriel need to spend on her and her family? Okay. Your lifestyle budget goes in first, not last. There's other programs where that's last. Okay. Okay. So you put in what you need to live on. Then we put in how much are you putting towards your retirement savings, because we can't touch that money either. Okay. The next thing is, what is the minimum payments on the debt? because we can't touch that because we need that money.
Okay.
The next thing we put in is, what do you spend for food, gasoline, insurances, church, everything else?
Okay.
See, that covers everything. Your lifestyle spending, your loans, your savings, and what it costs to live. Everything is in the budget.
Okay. And then from that, you determine how much I need to go into my savings.
Yeah, what is left over after that.
Okay.
Yeah.
Okay.
So yeah, we're not trying to cut you back on lifestyle.
Okay.
Okay. So we're not trying to make you eat beans and rice and ramen every day.
Right. Okay. I'm following you.
And you don't have to drive a 30-year-old car either.
Okay.
Okay. All right. And so I have people ask, can I still get my hair and my nails done? Yes, ma'am, you can. Okay. All of that. All of that. So we're not trying to cut back on. We want you to say, okay, this is what we need to live. We put all of that in. All right. So once we put that in, whatever's left over, we're going to show you how to optimize that in killing interest.
But Don has some valuable information that can contribute to the quality of a person's life. And it only costs you a few dollars. It's his book. Why not get that?
I'm going to go through the P.I.L.L method myself with some of my investment properties. So I'm going to link up with Don, and then I'm going to sit down with him, show him my investment portfolio, and see how I can eliminate interest.